Hello, my name is Tofpik. I am Head of Technical Analysis and Senior Market Analyst at ADM Investor Service International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish black crow yesterday as the continued consolidation or consolidating its recent rise of this market, but at the same time showing signs of avoidance in tackling the next overhead resistances. Overall, we're still within the breakdown from the recent cat's ears pattern formed over July to date period. In this particular instance, I've been taking a combination of 38.2% Fibonacci line, the March 2020 to January 2021 move at 116.94, and the neckline, which is also currently at 116.83, of the August to September 2020 head and shoulders top as the break area. And it is these two resistance areas that the market seems to be shy of testing. Anyway, regarding the original cat's ears pattern, we have a potential target X below in the 114.5 area. The key to achieving this target would be the market maintaining itself below the break line, or lines in this case. All this comes in the shadow of last month's monthly key reversal down. Now, looking further at an even bigger picture, we are still nicely moving down in between the upper time, currently 117.73, and the middle time, currently 114.02, of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action. So far today, no attempt lower and no real attempt higher. We're still within the main body of yesterday's action. It seems the market is still fighting shy of testing the overhead resistances. I continue to note that the descending short medium moving average, currently at 117.08, that is about to enter the frame. Cable, aka sterling against the US dollar. A possible bearish double yesterday as the market confirmed its aversion to rising and testing the overhead combination of the late July downtrend, currently at 138.53, and the flatlining long moving average, currently 138.50. Prices even went as far as closing below the declining medium moving average, currently 137.95. Overall, we are still back within the broken recent sideways triangle formed from the previously mentioned late July downtrend, and also the mid-July uptrend, currently at 136.63. The recent pullback up threatened a number of targets below for the sideways triangle, namely an initial target X in the 134.90 area and a secondary target X1 in the 132.65 area. We'd previously managed to achieve target X, and as you'd expect, the secondary target is harder to reach, so perhaps that may have been enough for that pattern as it is. We'll see. Additionally, I've droned on interminably about the longer-term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on, and prices didn't. However, the late September to early October move down had revitalized the idea enough that I'd placed some potential targets for this pattern. Initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With this very recent move, this big pattern is now also under threat. Below the declining medium moving average, we still have the gently declining short medium moving average, 137.21, as the next support. And despite yesterday's action, I suspect we're still maybe soon contemplating targets on the upside, whether for the sideways triangle or for something else. Well, that last bit I'm still unsure of. So far today, a little bit pushed down below the declining medium moving average, but we're nowhere near the declining short medium moving average below that yet. Euro sterling. An indecisive doji cross yesterday, which from the shape of it, you can see it saw a lot of pressure pushing down on the support from the old upper channel line, currently at 84.19 of the broken May to August bear channel. This somewhat unusual support has been enough to halt the decline since late September and most recently since last Friday. Overhead, we still have the significant April low at 84.70. This seems to have capped recent actions. Overall, we still have the idea out there that the most recent pattern is a large right-angled broadening formation formed since late May. The pattern is made up topside from the flat April 2020 low at 86.69 and below by the lower channel line, currently at 83.24. However, we have stayed away from the lower channel line for quite some time now, and I suspect this pattern may soon be morphing into something else. So far today, Another test lower, and so far another failure to push through the broken declining upper channel line. It looks like we might be actually trying to move back up towards the 84.70 area on the top side, but again it seems unlikely because it's not really threatening it as yet. US dollar against the Indian rupee. A bullish harami yesterday and a first contrary reactionary session to the very recent bearishness. We seem to still have little support below until the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. So it was again a bit of a surprise, even perhaps a welcome one, that the sharply rising short moving average, currently 74.84, managed to halt the decline for a second day, even if it was this time on a closing basis only. Overall, we're still above the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.44, which makes up the large April 2020 to date sideways triangle. This still gives an initial topside target in the 76.36 area and a secondary target in the 77.79 area. Obviously, the secondary target will be harder to achieve. All this has made obviously a big assumption that the recent break higher, up and away from the sideways triangle, is not a false break. Well, this assumption is being tested at this moment, quite a bit actually. Now, so far today, a resumption of the move lower again with what looks right now like a bearish opening black Mariboso. However, as yet we've come close but not yet touched the 50% Fibonacci line at 74.63. US dollar against the Brazilian real. A fourth bullish white soldier yesterday and a significant bullish opening white Mariboso as well. The market punched up through and closed over the upper time, currently at 563.06. Indeed, the market based itself for this move higher right on the now broken upper time. This move higher prompted me to redraw the original bullish Andrews pitchfork for this action, and I found that the lower time for this pattern, currently at 561.01, had surprisingly given a great idea of the overall bullish angle of attack. A lesson to me perhaps not to discard potential tools too swiftly if they don't immediately fit. Now, two further points to note. These two relevant tines cross over next Tuesday, so that is a day to watch especially. Secondly, we're about to make a golden cross of the short medium moving average, currently 534.65, up over the long moving average, currently 534.89. Though this is a lagging indicator, it's something to note. US dollar against the Mexican peso. Let's be honest, a somewhat unsurprising bullish engulfing pattern yesterday. As I pointed out yesterday, below the market we have the seemingly heavy support of the combination of the upper trend line of the recent broken descending triangle, currently at 20.17.19, plus a mess of moving averages. To start with, the gently rising short medium moving average, currently 20.19.24, the slowly rising long moving average, currently 20.16.55, and finally the barely rising medium moving average, currently 20.09.87. So you can see there seems to be some power below current levels. What was perhaps a little surprising was how little the topside rose, only as far as the lesser Fibonacci line at 20.33.82. This lack of topside initiative did little to reduce the threat to the secondary target X1 in the 21.23.5 area for the June to date descending triangle pattern. Yet all this is still in the shadow of last week's weekly key reversal down. So far today, another attempt up to the lesser Fibonacci line at 20.3382, but a failure to penetrate, and so prices have moved back down, though not as far as to test the heavy support below, well, for now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.